We have a very special guest with us today on this Friday. He is the legendary trader Mark Fisher of MBF Clearing Corp. He joins us now in an exclusive interview. And Fish, it's so good to have you with us. I sort of mentioned at the top is your prowess is known for what you do in the commodities market, and that's how we, generally speaking, talk to you. I don't want to do that yet. I want to save our conversation in commodities and energy and what is really your wheelhouse, and just talk to you generally about what you're seeing in the market right now. You've seen a lot of markets. I mentioned earlier today you were a student of Professor Siegel at the Wharton School. Just give me your idea of where you think we are, where we may be going, and then I'll move on and talk about what Professor Siegel told me today, which I want you to react to also. But just first, your view on what's going on.
Right. Okay. Well, Scott, what's going on is that we need to manage the supply crisis. The only way inflation comes down in the long run is if we go ahead and create more energy, better food, more housing, and lower health insurance costs, right? Because take someone that has blood pressure problems. You go ahead, and the Fed can go ahead and control paper assets via the interest rates and via selling bonds and everything. And what does it do? It's sort of like blood pressure medication. You take blood pressure medication, and your blood pressure goes down. But the minute the Fed lightens up and stops raising rates or it becomes more friendly to the market, right? What's going to happen? Just like when you take blood pressure medication. When you stop taking it, your blood pressure goes straight up. On the other hand, if you lose 25 pounds, your blood pressure doesn't go back up. The market needs to go to the mode of losing 25 pounds, and the way you do that is by stimulating supply of food, supply of energy, supply of housing, and lowering healthcare costs. And if you say that's impossible to do because this country can't agree on anything, think about 18 months ago in Europe. If I would have told you 18 months ago, Scott, I want to build an LNG plant or a small nuke plant, you would have laughed at me. I mean, there was probably a better chance of me winning the Miss Universe pageant, right? And it would have taken 8 to 10 years to do it. Now, they're building LNG plants in 18 months. Why? Because the market reached that tipping point where everyone says, we need to do something, and they're doing it. The question is this country ready to go ahead and to address the supply issues once and for all, and get past all the politics, whether you're a Democrat or Republican, and realize that we have to stop beating up the middle class? Because think about this, Scott. Did the middle class really cause inflation? No. But if you raise unemployment, who really suffers? The middle class, right? The answer is we need to go ahead and increase and incentivize the supply side of the equation. And I can show you it's not that hard, but it means we actually have to all get on the same page, or relatively on the same page.
So there's a few different things in there. Number one, I think we can both agree that one of the issues with all of this is that the Fed cannot impact the supply side of economics. So that's problem number one, right? Its toolbox isn't fixed with the tools that can deal with that. And number two, to your analogy of the blood pressure, you're talking about real structural changes, none of which are able to happen overnight. Maybe we can speed up the process. Maybe we can speed up the process, to your point about what's happening in Europe. But even in that scenario, we're talking about a many, many months long process. And we've got the here and now of inflation that we don't seem to know exactly how to get it down fast enough, even though some would suggest it's coming down, and maybe quite substantially in certain areas. And therein lies the problem.
But it is coming down temporarily, right? I mean, obviously, Professor Siegel is right. Everything, crude oil from 110 to, 70 something, right? It's all come down. The question is, how do you keep it down? And again, I don't really think you need to have the solution tomorrow, but people need to get on the same page. And if the marketplace perceives that there's going to be a supply chain answer, and it actually then takes a while to happen, but they really think that it's going to happen, the market's going to correct itself to it, and inflation expectations will come down in general, right? But if you think about, look what happened in the UK today. They just tried to stimulate demand, and look what happened, like you guys said, look what happened to that bond and currency market, destroyed. If that's not the sign that stimulating demand is not the answer here, I don't know what is. if we can't wake up in this country and realize that for the first time we have an inflation issue that's not going to go away. I mean, it's going to go away now with the Fed killing everything, but the minute the Fed lets up on the pedal, we're going to be right back to where we were. We need to go ahead. I mean, it's pretty obvious.